The ins and outs of assuming a VA loan, a guide for veterans. Hey everyone, welcome back to the channel. If you're a veteran looking to get the most out of your VA loan benefits, you're in the right spot. Today we're diving into a topic that doesn't get as much love as it should, assuming a VA loan. Yeah, that's right. You can actually take over someone else's VA loan, and there are some pretty sweet advantages to doing so. Not every VA loan is assumable, so you'll have to check the loan documentation first. Usually they will explicitly state whether the loan is assumable or not. So even if it is, the lender usually has the right to approve or disapprove the assumption. They might ask for a credit check, employment verification, and other stuff for a typical loan. And if you're a veteran, which you probably are if you're watching this, you'll need to provide your certificate of eligibility. That's our golden ticket in the VA loan world. How to assume a VA loan. Now that we've tackled eligibility, let's walk through the process of assuming a VA loan. So first, you and the current loan holder will sign an agreement to assume. This is gonna outline the nitty-gritty details of you taking over the loan. Then you'll submit an application to the lender. If all goes well and they approve you, you'll move on to the legal paperwork to officially take over the loan. Last but not least, don't forget to notify the VA that you're assuming the new loan. Money talks, what's it gonna cost? I can hear you asking, this sounds great, but what's it gonna cost me? So that's a great question. Typically, the VA levies a funding fee of around 0.5% of the outstanding loan amount. In addition, there might be extra closing costs, but the good news is that these can sometimes be incorporated into the loan, eliminating immediate out-of-pocket expenses. Furthermore, if the property's value has increased since it was initially purchased, which is quite probable, you'll either make a complete cash payment to cover the difference not addressed by the assumption, or secure a new loan for the remaining balance, factoring in related expenses like down payment and closing costs. Hey, so let's quickly cover the pros and cons of assuming a VA loan. So you can often get a lower interest rate than what's currently available in the market today. Plus, you can save on closing costs and get through the process faster than getting a new loan. But be cautious. If you don't get a release of liability and the new borrower defaults, you could still be on the hook. Also, you'll be given up any equity you've built in the home, so make sure the sales price reflects that. Hey, so one last thing for my fellow veterans out there. If another veteran assumes your loan, you can get your full entitlement restored. But if a non-veteran takes it over, you may lose some of that entitlement. Now that's just something to keep in mind if you plan to use your VA loan benefits again in the future. All right, folks, that wraps it up for today. Assuming a VA loan can be a great option, but it's not without its quirks. Always consult with a financial advisor or a real estate professional who is familiar with VA loans so that you can get tailored advice for your specific situation. Thank you so much for watching. If you found this video helpful, make sure to hit that like button, share it with anyone who might find it useful, and subscribe for more content like this. Until next time, take it easy.